Hi, thanks for watching. I'm Chris Jorstead with thebestarizonahome.com. I just wanted to review a couple of things with rising interest rates and how you can sort of calculate how that's going to affect you depending on the price of your loan. Of course, these are just kind of preliminary numbers and somewhat of estimations. Of course, talk to your loan officer to really understand how rising interest rates are going to impact your monthly payment and how they are going to, how you can get locked in to ensure that you are not affected by rising interest rates as they continue to go up here. Apparently, the Fed says they may rise up to six times this year and a little bit next year as well. So we don't know exactly where that top is. So it's important to get locked in as soon as possible. Of course, to do that, we would want to find a home that you want to purchase, and I can help you with that. So I'm going to use in this example, I'm going to use Mesa, Arizona, as kind of our, I guess our standard to look at how prices are being affected, how things are coming up, and look at an average cost per house in that area. Just because Mesa is pretty big, and it's my market, and so I like to investigate it and kind of know the numbers there. So let's get into it. I have some information in the background. As you can see, we're going to talk a little bit about the current absorption rate, and I'm going to show you how to use our mortgage calculator to kind of play around with the numbers, so you can kind of get an idea. So just taking this is information from the MLS. Just looking at the absorption rate. So the absorption rate here, as you can see behind me, it's just a metric you can use to take the active listings divided by the average number of listings sold there, and that gives us a good idea of approximately of how long it could be taking for the average not days on market, but similar to basically how long we can expect the actually there's a great um, explanation. So it's a month's chart to show how long the current inventory of properties would last at the current rate of sales. So if everything kept going and we didn't see any new inventory, this is approximately how long everything would stay. So as you can see, we've actually come up, um, since since early January. Let's see, April, March, January, June. Sorry, June. We started to see a huge increase. So it slowed down a little bit in June, all the way up to September of last year. Now it's starting to come back down after the holidays and everything, and then we're going to see it come back up a little bit. But I bet you with interest rates, it'll kind of continue to slowly come up. So for buyers, that's a good sign. For sellers, that can indicate that it may be a good time. You're kind of at that peak time when you want to sell. We do see the number of listings coming up a little bit. However, listing prices still slowly continue to rise. And I'm happy to send you any and all of this information. Of course, there's another report I like to look at. The NARR report is a little bit more specific. I just want to point this out. This was kind of daunting, I guess, that here we are. So this is the change in Mesa over the last 3 years. We've seen approximately a 65% increase in the median home value. So I think that's good just to identify, that it's a pretty big deal. We've come up in house prices quite a bit, and it's tough for buyers out there, and that's why. I mean, when you see that kind of an increase over 3 years, that's huge. And just over the last year, we saw more than half of it roughly. Um, this report's got a lot of really good information. So if you do want any further in-depth report on any market, I'm happy to send this to you. I just use Mesa because it's my local market, and so I keep an eye on it, but it's got a lot of good information. The next thing I wanted to kind of talk about was what rising interest rates do to your mortgage payment. Um, so I just took an example here, and it's going to depend, approximately how much your mortgage is. But if you have, say, a $500,000 mortgage at 385, that's your monthly payment approximately. And and over here would be a 1% increase to this monthly payment. And I'll show you how I got that using the mortgage calculator from the Best Arizona Home. So now again, like I mentioned, it actually depends on your the price of your mortgage, or your total mortgage, because it's a percentage, right? So so when I run at 385, I just 4% down on $50,000, $500,000, and I increase that interest rate up one. You see how it comes up about $300. Of course, that's going to vary quite a bit if you're only getting like $100,000 mortgage. That's going to affect your payment quite a bit. So it's all more like it's important to provide you with the tools to kind of play around with it and figure out, how your mortgage is going to be affected depending on the price of the house and how much you're able to put down. So it will change. It will go up, obviously. Of course, there's a lot of other options in regards to maybe what type of loan you can get and how that will affect the interest rate as well. Down payment assistance for FHA loans, things like that. Veterans loans are going to be affected. So, but generally speaking, pretty basic, right? Once the interest rate goes up, your mortgage payment's probably going to come up as well. So, let's get a move on it. Let's find you a house before those interest rates come up even further. Go ahead and sign up at thebestarizonahome.com. Again, I'm Chris Jorsted, and I hope this helped you understand a little bit about what it means when interest rates rise.